Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 30th, 2016. So the stocks are pretty much range bound, and I'll show which range I'm talking about, but I think the resistance at around 2180 is reaffirmed for SPX. We'll look at that chart in more details. Next Friday, October 7th, is the big unemployment report, so there will be more extra volatility on top of normal volatility. However, generally speaking, I think the stock market is bullish, and QQQ again closed at all-time highs. Semiconductors, industrials led, while the real estate and utilities are lagging the market. We'll look at Deutsche Bank, which bounced off all-time lows on just enormous volume. We'll look at bonds in more details, see maybe they're getting ready for another leg down, or maybe they know something that the stocks do not. Look at Forex and the US dollar versus Japanese yen. Gold again is pushing towards the critical support at around 1300s, and GDX is showing a bearish divergence. I think oil might be headed higher for a retest of $50. Look at natural gas, it is pulling away from 52-week highs. And finally, we'll finish with agricultural commodities that seem to be back in the bear market, possibly due to livestock prices. All right, so let's start off with S&P 500 ETF SPY. So we had this big drop here, big gap here, and then continuation lower, but stocks sort of recovered. Now we have what I think is a range-bound action, topped at 217.53 here and bottom 211.24, and I think it just feels sort of incomplete, like this drop down kind of didn't even get to the tops here. Usually when this kind of drop happens, we get to see maybe a bit of an overshoot, like, you know, down to here maybe, but we didn't really get there. So I feel like we're not, you know, yet complete with this, you know, flushing out of the overbought condition, overextended condition. So we may see, you know, further decline and possibly a retest of this 211 area. And I think that if we don't hold here in 211 area, we could easily revisit the Brexit lows. You know, down below here we have the breadth momentum oscillator, one of my favorite indicators. We did dip into a negative territory and we kind of came back up in positive territory, but just barely. So I think we may actually redip into the negative territory again. So I wanted to concentrate on this area here from the 9th till today, basically most of October. So I went ahead and I'm going to pull up a chart of S&P 500, and this is a 4-hour chart, and this is a CFD, contract for difference. And this is a chart from the 8th until today on the 30th of September rather. So you can see here, kind of pretty obvious that we have a plunge, an attempt, you know, a bounce higher, and then a first attempt to get back to the previous resistance here. And now, even today, you know, it was a very strong day in general, and we had a strong, you know, move up in stocks, and then at the very end, we had this, you know, lots of selling, literally the last like 15 minutes of the day. So what I see here is, for now, I think this area of resistance in around 2180 is reaffirmed, and I think we may see a another attempt by the bears to push the prices lower, especially if we break below this low here at 2107. I think we may see a further move down to around here, which is a Brexit low, basically. Again, absolutely anything is possible, and we could just continue higher, and then, you know, break out to fresh all-time highs and continue higher. we had this plunge and then a bounce higher. So like I said on the previous charts, this is a weekly chart by the way, we could just roll over and head lower and break this low, 21.25, and head lower. So if that happens, a retest of the Brexit lows around 2025 2000 is entirely in the cards. But I think the market is bullish, so I think if a pullback does occur to the Brexit low, it would be, I think it will be a good buying opportunity if it does pull back that far. Here's QQQ, the riskier part of the stock market, and you can see that we actually closed at all-time highs. So this is all-time high last week, but this is an all-time closing high just this week. So this is showing still decent appetite for risk, and you can see people are still buying at this very high prices up here. Out of the industry groups that stood out is semiconductors, and XSD is a very broad semiconductor ETF. It's basically an equal weight semiconductor ETF, and you can see that there are all-time highs and all-time closing highs. So this is quite strong, incredibly strong move, in fact, of the Brexit lows here. Industrial is also pretty strong this week and gained over 1% and very close to all-time highs again. So even just this industrial group together with semiconductors and QQQ, this is a very much an offensive group, and it's very much a risk-on group. So far, I'm seeing still decent appetite for risk even at these high prices here. So big news this week, of course, was Deutsche Bank. I'll show the chart next, but it's quite incredible. But the important thing is that Deutsche Bank looks like they went ahead and settled the mortgage-backed securities with Department of Justice. So this seems to be like good news for Deutsche Bank. And here's the chart of Deutsche Bank. And this is a weekly chart. I don't trade this stock, but I just thought it was a very interesting chart. These are all-time lows, not just multi-year lows. But the thing is about this volume, it's just incredible. It is literally the highest on record. So we had, what is it, 175 million shares traded this week. This is a weekly chart, by the way. So could this be the bottom in prices for Deutsche Bank? It's possible. It's also possible that we're going to turn around and continue lower. But even just this year, looks like the stock was cut in half. It was around $24. Now it's less than 12. So, sometimes things that are cheap could get significantly more cheaper. And like, for example, this candlestick right here also was in decent volume back then, and it sure looked like a hammer candlestick. In fact, we did bounce afterwards, but then we turned around and made a new low. So finding bottoms in bearish security is notoriously difficult. So that's just for information purposes. I thought it was a very interesting chart to show. More relevant to United States markets, of course, is real estate. That lost this week 1.6%. Once we get to bonds, I think it may become more obvious why that's happening, because bonds are more interest rate sensitive than the rest of the stock market. So I think still this is a bullish chart, but looks like we may be retesting this $78 area for IYR again. We'll see where that goes. XLU had a similar looking chart, but it lost even more. It lost 3.8%. So it was, I think that was the worst performing sector this week. So for now, I still think this is a bullish chart. We had the all-time highs here, pullback, and then continuation higher. But this could be a bearish engulfing on the weekly time frame. So I cannot rule out that we may actually break the support here and continue lower. And again, utilities are still stocks, and they correlate highly to the general market. So here are the bonds, and this is TLT, 20 plus year Treasury bond fund. So here we had all-time highs in July of this year, and it's possible that these are indeed the highest prices we'll see for bonds in our lifetimes. But it's also possible that they are not. Right now, there is a possibility that we are witnessing a reversal um, in the bond market, because looks like we came up relatively sharply higher, came down, and then we kind of broke below the recent support, and then we're attempting to bounce higher, but so far we haven't been able to at least take out this high. So, for now it looks like, we are making a series of lower highs, and now looks like we made a lower low. So it's possible that we are reversing in the bond department. Now, I'm not yet prepared to call this a bearish security, but we have to keep an open mind about that as well. So here is the U.S. government bonds in a 4-hour chart. Um, you, if you're lucky enough to be able to trade CFDs, then you can trade this, because you could trade it. This is a very liquid market, but you can see that there is a definite downward slope to the recent uh, chart. So it's possible that we are reversing in the, bonds may be reversing from the uptrend, from the multi-year uptrend to a downtrend. Now, I'm not yet prepared to call it a downtrend, but this action here is not terribly inspiring. We had what appears to be a shooting star, and then we continued lower, especially on Friday. Coupled with the fact that utilities lost for the week, maybe we're going to see some further correcting action in bonds. And also December, there is another meeting of Federal Reserve meeting, so maybe they are going to raise the interest rates. So that's also a possibility. Here's a longer term perspective of TLT. Broke out of this consolidation here, completed this 6.2% move, and now we're correcting possibly as a flag, falling flag. Now we need to see a breakout with a close above 140 here on Friday basis to to entertain possibility of moving higher to all-time highs. An alternative possibility is we are gonna continue making lower lows. That's also a possibility. Here's the diversified AGG, the aggregate bond ETF. Not as obvious as it is for the TLT, because we're almost at all-time highs. We're very close to all-time highs. But this includes a lot of corporate bonds, so it's a mixed fund. Again, this will sort of depend on where the Federal Reserve will take the interest rates. But for now, I think this is still a reasonably constructive chart and a bullish security. And here's the weekly time frame for AGG, and this one, really tried to break out. I think if I was, I think that close above this high here, maybe around 112.75, basically would mean new all-time highs. But for now, I see that this has been rejected in this area at around 112.60 or so. You can see there's a bunch of selling tails out of the top here. So far that the higher prices are being rejected really, and it's possible we're going to roll over and head lower. Moving on to the Forex universe, this is US dollar index on the daily time frame. This is when the Federal Reserve announced that they're not going to be raising interest rates. the dollar dropped against other currencies, but the drop was relatively muted, so it kind of dropped a little bit and then just went sideways, maybe even slightly up. So didn't really go, that far. For now, I still see support here at 94.05 and resistance 96.50. As we will see from the weekly chart, I think this is a bullish chart still. Like I have a bullish bias for the US dollar, so you can see that there's this looks like a bullish pattern to me. We had a strong move up here in 2014, and then basically this is sideways consolidation. And then if we see a breakout above 100, we could easily see stronger dollar in the near future. This would likely mean that the euro will continue its downtrend and may even break down below this $1.04 mark and head lower. For now, it's still kind of trying to, I think it's still attempting to retest the highs here in the 1.14, 1.17 area, but I think that there's strong resistance up here. And then most likely, well, we'll see what happens, but my bias is for euro versus US dollar to continue lower. British pound versus US dollar is again very close to 30 plus year lows here, and last time it kind of held support here and bounced. I wonder if we're not gonna hold support here again and just continue lower. This is a bearish chart, pretty clear. Like this bounce here, I thought it was gonna go much higher. I thought it was gonna go to $1.38, but it barely made $1.34. So even this gap here is still somewhat unfilled. Anyways, the interesting chart to me is again the US dollar versus Japanese yen, and again we're seeing this. But I think this is a bottoming pattern here in the 101 area. Multiple touches of this pattern yet again this week we pierced through, and this possibly is a hammer candlestick. So maybe we'll find support here, and the US dollar will rally versus the Japanese yen. That's entirely a possibility. So moving on to gold, and before we move on to gold, I want to point out that we barely budged. We stayed in place basically. Dollar lost 0.01% for the week, so it did not move at all. While if we look at gold, gold actually lost for the week. Let me go to weekly right now. Gold lost over almost 2% for the week, and that's really kind of interesting because the dollar barely budged, the gold lost significantly. So it appears that gold maybe is anticipating some sort of a move in the dollar, and it's possible. Well, we're certainly headed for a retest of this level at $1,300, and this level is quite important. And I think if we break from here, we could easily correct back down to 1,200, and that level needs to hold for the bulls to have a case. Because if we break below that, we could be back in a bear market again. So here's a daily time frame. You can look at it from 2 points of view. This could be a bull flag. This is a handle here, and this is the actual flag or a pennant. But the other way to look at it is we're making a series of lower highs. So far, we have not made a lower low. But again, this $1,300 area is extremely important to gold, and I think it needs to hold it there. Otherwise, there could be significant corrective action in gold. The one thing I really wanted to point out for GDX, this is Gold Miners ETF, on a daily time frame. So over the past, basically September, we were making higher lows did not make a higher high, but so um, this looks okay, but if we look under the hood, so to speak, so we have the um, advanced decline data for the gold miners. You can see it was making lower highs and lower lows. So this is a bearish divergence, and this could be a prelude for gold miners to correct further. Now, as far as correction targets for GDX, we could see some support maybe around here, but I think the stronger support is around 2194. The reason being because there's a lot of activity in this area, and also the 200-day moving average is coming in at that area as well. So it's entirely possible we're going to see further corrective action in GDX um, before bottom will be found. I think this is still a bullish chart, and I think the gold and gold miners are still in the bull market, but this could easily change, especially if the dollar, like I just showed, if the dollar decides to break out of this 2-year consolidation. Here's oil, West Texas Intermediate on the weekly time frame. Big gain this week. What is it? Almost 9% gain for the week. I'm not sure what to make of it. I still think this is a bearish chart. $50 here, I think, is a line in the sand, and we could break above it, but there's still resistance up here from these peaks, and then there's resistance from these peaks. I just don't see it really going much higher, especially if the United States producers decide to ramp up production. So, but I have to keep an open mind, so it's possible we break out and maybe meander sideways. Um, I am honestly only looking at shorting this security, so I'm not yet interested in buying it in the longs. I just don't see a good reason to own it, really. Here's natural gas. This is bullish. This one is much more bullish in my opinion. These are 52-week highs, and it's normal to see some, profit taken and possibly more correcting of the 52-week highs. So, maybe after this correction we bottom out and then continue higher. I think this is a bullish security, so long term, we should see more 52-week highs rather than a turnaround. This pattern here surely looks like an upside down, maybe head and shoulders, and depth of this pattern is, what is it, about 17, 18, 20%. It's easily could be duplicated on the upside, and actually next chart I'll show what I mean. And here's that same pattern on the weekly time frame, and we could easily duplicate it on the upside, so maybe around 20%. That would put us around $3.60, and we'll close this gap from 2014. That's entirely in the cards. And we'll finish off with some of the agricultural commodities. Here's the DBA. It's one of the, not an ideal vehicle, but it's better than nothing, I guess, if you want to just have a diversified exposure to agricultural commodities. I thought that this was a breakout and a new bull market, but it does not appear so anymore. It looks like we're very close to fresh, I think these are all-time lows, and we could easily break below this all-time lows. This candlestick just doesn't inspire confidence. So this is a volatile commodity, volatile security, and in general commodities are quite volatile, so be extra careful when trading them. One of the reasons why DBA is in such a strong downtrend is, of course, because of the livestock, and looks like this week we just hit all-time lows, and this, I just don't see an end to this. It just keeps going and going. And here is livestock sub-index. You can see we're actually hitting all-time lows for this particular index, and this is going back to 92. So for now, I just don't see a bottom in agricultural commodities just yet, although some of them are moving higher. In fact, at MasterChartsTrading.com, we are trading them on the upside. For example, sugar, coffee, and cotton, and we're trading them on the upside. So if you'd like to hear more and consider signing up, please stay tuned on how to find us on the internet. Thanks for watching, and have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the success as trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.